Hi ladies and gents, it's Lachlan Elsworth here, Senior Client Advisor for TradersInternational.com in Australia, New Zealand and Southeast Asia. Now what I'd like to do, ladies and gents, building on the series of videos we've already put together on signal recognition and volatility measurement and all that kind of stuff, I want to actually start to show you examples of how it is working in the market. Now, as you know, one of my favorite indexes to trade is the Euro Stoxx 50, and what we've got down the bottom here, I've marked it for you with a yellow arrow. We've got an absolutely textbook buy signal, so really nice buy signal. For those that have done the Traders International education, you will understand why this is such a powerful signal. Also, you'll understand how you could have actually traded this signal for a huge amount of profit. What I want to do is actually pick on this signal here and show you how you can actually interpret the market as the market moves into profit, and show you how you can probably control those greed and those fear demons as the market goes up to run up quite nicely. So in the first video, I'm going to talk about the structure of the signal. In the second, I'm going to talk about the significance of the 100 and the 50 moving averages and the 200. And then what I'm going to talk about finally is DS fatigue. So let's get on with the first video. First and foremost, ladies and gents, what we need to focus on is our momentum, and we need to check that our momentum is stair-stepping in the right direction. Now, as you can see here, both of the proprietary indicators are stepping in the right direction, telling us that momentum is about to turn and rise. What we then look for is price divergence. So we actually want price going down in the face of momentum going up. Now, as it turns out here, even though it is a very simple strategy, I tend to find that this is actually successful more than 70% of the time. That is why I trade this style of signal with confidence continually. Now, we've got some great volatility coming into the signal here, but one thing I do want to point out is if we measure our initial volatility from our zero candle, we're looking at around about 5 ticks worth of volatility. So not quite enough for me to be confident with the signal. However, if we measure interim volatility, which is from extreme low to extreme high, we've got exactly what I require, 6 points worth of volatility. Now, what have we got here? An absolutely textbook buy signal. And again, the target that I'd want new traders to actually pick on is an 8-point target. So we need to basically go from 2905 to 2913. What does that mean? There is your 8% return. It took around about 20 minutes to get there. Okay, so not long to wait for a nice little 8% return. The key question, how could you have traded that signal for a lot more profit? And what is going on the chart here to actually show you that there is more profit available? What I'm going to do in the next video is come back to this signal and show you exactly how to focus on the market and focus on taking money off the market, or in fact taking more money off the market than what it just offers here. Now, as you can see there, an absolutely stellar opportunity to trade the market. So well done for all of the Traders International clients that are well aware of this signal and well aware of how to trade it. Now, I'll come back for the next video, ladies and gents, and I'll show you exactly how to take some more money off this Euro Stoxx 50 chart. Thank you, and bye for now.